Imagine a hidden conflict raging beneath the surface, not with gunfire or tanks, but through economic maneuvers like tariffs and digital currencies, quietly reshaping the world's financial landscape. As global economies wrestle with soaring inflation, fractured supply chains, and rapid technological shifts, the U.S. has made a bold play that could redefine the game. Trade with China worth billions has been severed. Ports are clogged, shipments are stranded, and a new kind of warfare, fought with data and decentralized finance, is emerging. This isn't just a trade spat, it's a high-stakes economic standoff unfolding before our eyes. The U.S. has halted $2.8 billion in Chinese imports, leaving over 25,000 containers idle at major ports like Shanghai and Shenzhen, now ghost towns of global commerce. Sky-high tariffs, with rates hitting unprecedented levels, are behind this disruption. American firms are racing to redirect supply chains to Southeast Asia, but the pivot is faltering. Factories in Vietnam, Thailand, and Indonesia are stretched beyond capacity. Logistics costs are skyrocketing, and what was meant to be a backup plan has become a logistical quagmire. China, however, is not standing still. Its manufacturers are holding firm on prices, and Beijing has unleashed a game changer, the digital yuan economy. This isn't just a cryptocurrency, it's a state-controlled, programmable financial ecosystem poised to challenge the global order. While Western economies debate monetary policy, China has sidestepped SWIFT, the backbone of international banking, with its own system, CIPS. Nearly 40% of China's trade now bypasses the US dollar entirely. From Latin America to Africa, nations are starting to transact in yuan. Over a third of Southeast Asia's trade with China has shifted to non-dollar currencies. In just 2 years, the yuan's global share has surged from 1.9% to 6%. This isn't about ideology, it's about pragmatism. The ECNY enables instant payments, automated contracts, and intermediary-free deals. Cross-border settlements between places like Hong Kong and the UAE now take seconds, not days. CIPS handles $83 billion daily. China's ambitions extend beyond currency. It's embedding the ECNY into global infrastructure, from rail networks in Laos to ports in Pakistan. Over a dozen Belt and Road countries now use the digital yuan, some via self-executing smart contracts that are transparent, reversible, and tightly controlled. China isn't just playing the game, it's building the board. In response, the U.S., under its 47th president, has doubled down with crippling tariffs. Rates started at 10%, then climbed to 20%, 34%, and now a staggering 104%. A $400 smartphone now retails for $800. A $20 toy costs $40. Cars carry an extra $6,000 to $12,000 price tag. Intended to weaken China, these measures have instead rocked global markets. Wall Street lost $700 billion in a single day. Asian markets tanked, with Hong Kong's index posting its worst session in decades. U.S. indices plummeted 10 to 15% in days. China's counterstrike was surgical. Restrictions on rare earth metals, critical for everything from EVs to military tech. Controlling 90% of the global supply, China now requires licenses for exports to the U.S., with approvals nearly impossible to secure. It's not an outright ban. It's a chokehold disguised as red tape. Trump's economic gamble is drawing fire from all directions, even from those who once stood firmly in his corner. Media outlets that historically provided unwavering support, such as Fox News, are now raising red flags about the direction of the U.S. economy. This shift is not subtle. In recent broadcasts and op-eds, Fox News analysts have expressed growing concern about the ripple effects of Trump's economic decisions, particularly his aggressive trade stance and tariff-driven approach. These concerns are no longer whispers, they're alarm bells. Bloomberg, known for its detailed financial coverage, has also joined the chorus of warning. The outlet has been closely monitoring market reactions, and the numbers paint a troubling picture. In just a matter of weeks, the Dow Jones Industrial Average has plunged more than 1,500 points, a dramatic decline that has wiped out billions in shareholder value. It's not just the Dow. The S&P 500 recently suffered its sharpest drop since early 2025, marking a critical turning point in investor sentiment. These are not isolated events, but indicators of deeper systemic anxiety. Wall Street is officially rattled. Market volatility is surging, and safe haven assets like gold and U.S. Treasury bonds are seeing increased demand, classic signs that investors are bracing for economic turbulence. Financial analysts point to a toxic mix of unpredictability, policy inconsistency, and rising geopolitical tensions, all of which are undermining confidence. For an economy once touted as stronger than ever under Trump's leadership, the reality is beginning to fracture under pressure. The confidence crisis is spreading far beyond trading floors. Business leaders, from small entrepreneurs to corporate executives, are voicing frustration over unclear policy directions and escalating costs. The trade war with China, in particular, has been a lightning rod. Trump's strategy was initially pitched as a necessary battle to protect American jobs and manufacturing. But the real-world impact is far from the promise. Tariffs have increased the cost of imported goods, disrupted supply chains, and triggered retaliatory measures from key trade partners. As a result, companies are facing slimmer margins, higher production costs, and shrinking international competitiveness. Trump points fingers at Biden, blaming him for inflation and trade woes in speeches and briefings. But the numbers don't lie. The Federal Reserve confirms that tariffs are inflating costs, not curbing them. Harvard Business Review notes that Chinese imports now cost U.S. businesses and consumers 7% more. Domestic manufacturers meant to thrive under America First are reeling from higher costs and weaker global demand. Small businesses are shutting down, factories are idling, and unemployment is creeping up, undermining the jobs boom Trump once touted. This is the new battlefield. One side crafts digital financial systems, the other piles on tariffs. One builds a coded economy, the other enforces tax barriers. The stakes, control over the world's money, and the consequences of losing it. This isn't a skirmish, it's a tectonic shift in global finance. Stay tuned, because this war isn't fought with bullets. It's programmed in the shadows, and it's already begun. What if I told you that a single sentence wiped out a staggering $10 trillion from the global economy? And it all began with a tariff war between two titans. In the high-stakes arena of global economics, a tempest is brewing, one that dwarfs anything we've encountered before. The U.S. has launched its most aggressive trade offensive yet, and China is retaliating with equal fervor. From soybeans to semiconductors, nothing is safe. As tariffs soar and markets tumble, one pressing question lingers. Are we witnessing economic warfare or the unraveling of a global order? Let's dive into the intricate dynamics between Washington and Beijing and why this could reshape our world forever. It all kicked off with a bold strike. In response to steep U.S. tariffs, China imposed a staggering 34% levy on all American imports, targeting the very lifeblood of rural America. Products like pork, sorghum, and soybeans, crucial to Trump's political base, have now become pawns in this perilous economic chess game. Just last year, the U.S. exported $15 billion in agricultural goods to China. Today, that trade corridor teeters on the brink of collapse. Yet Trump remains undeterred. He has doubled down, escalating tariffs on Chinese goods to a punishing 50%, bringing the total U.S. tariff rate to an unprecedented 104%.
That's why additional tariffs on Chinese goods are in place effective midnight tonight at 104%.
This isn't merely policy, it's economic warfare. What does this mean for everyday consumers? Picture a $20 toy suddenly priced at $40. An iPhone that once cost $400 now climbing to $800. A basic car? It could see a $6,000 price spike overnight. The financial hit is already reverberating through American wallets. But China didn't stop at tariffs. Beijing wielded another powerful weapon: rare earth metals. These essential elements are the backbone of smartphones, electric vehicles, military technology, and space exploration. With China controlling up to 90% of global production, U.S. companies must now secure licenses to access these materials. Licenses that are seldom granted. Experts are calling it a covert embargo. Within hours of Washington's tariff announcement, Asian markets went into freefall. Hong Kong's Hang Seng Index plummeted 13%, marking its steepest decline in 3 decades. Shanghai lost a staggering $500 billion in a single day. The shockwaves reverberated to Wall Street, where U.S. markets nosedived 15% in just days. Investors fled, hedge funds flocked to gold, and analysts began whispering a chilling term: shock therapy. But this isn't just an economic crisis, It's a psychological one. In a historic press conference, Trump refused to backtrack on the tariffs, declaring, "There are no plans to pause." With that one statement, global confidence evaporated. He then tossed in a curveball, calling for open borders while simultaneously advocating strict immigration policies. This contradiction sent the media and markets into a frenzy, leaving even his own team scratching their heads. Meanwhile, he touted victories on domestic fronts, claiming food prices were down, interest rates were falling, and groceries were cheaper than ever.
We have groceries, meaning food is down. We have everything is down at levels that nobody ever thought.
Yet the data tells a different story. The cost of living remains painfully high for millions. Eggs haven't dropped 79%, and countless families continue to struggle. Experts argue it's less about facts and more about feelings. Groceries isn't just a word. It symbolizes a profound struggle. But the facts don't lie. On the global stage, Trump claimed American automakers face barriers in Europe. In reality, companies like Tesla and GM are successfully shipping thousands of vehicles overseas. The true damage is occurring at home. U.S. car factories are scaling back, jobs are disappearing, and auto prices are skyrocketing. Now Europe is retaliating with its own 25% tariff on U.S. products. Major corporations are on high alert. Apple is eyeing India as a potential manufacturing hub. If every iPhone were made in the U.S., the price could soar to an eye-watering $30,000. Far beyond the reach of the average consumer, signals the dawn of a new global trade order, one where the United States may no longer hold the central leadership role it has maintained since World War II. While Washington retreats from multilateral agreements and engages in tariff wars, Beijing embraces globalization, invests in infrastructure worldwide, and champions free trade in ways that serve its long-term economic and geopolitical interests. A prime example of China's outward-looking strategy is the Belt and Road Initiative, BRI. Launched in 2013, the BRI aims to connect Asia, Africa, and Europe through a vast network of roads, railways, ports, and economic corridors. This initiative not only enhances trade routes, but also extends China's soft power by investing heavily in countries in need of development capital. Nations across Africa, Southeast Asia, Eastern Europe, and the Middle East have become increasingly reliant on Chinese investment, forging closer economic ties with Beijing than Washington. Simultaneously, China is strengthening its economic relationship with Europe. Despite political differences and human rights concerns, European nations continue to engage with China, drawn by the vast potential of the Chinese market and the promise of mutual growth. Germany, in particular, has deepened its trade relationship with China, making it one of its largest export markets outside the EU. The EU-China Comprehensive Agreement on Investment, although not yet ratified, underscores Europe's commitment to maintaining robust economic ties with Beijing. This reconfiguration of global trade is also evident in regional agreements where the U.S. is notably absent. The Regional Comprehensive Economic Partnership, RCEP, stands as the world's largest trade bloc, encompassing 15 countries including China, Japan, South Korea, Australia, and New Zealand. Covering nearly a third of the global economy, it excludes the United States entirely. The RCEP reinforces China's position as a pivotal player in the global trade network, while the U.S. has distanced itself from multilateral frameworks, including the Trans-Pacific Partnership, TPP, which it initially helped to shape but later abandoned. Developing countries find China's economic approach particularly appealing due to its often minimal political conditions compared to Western aid. Where Western powers may demand governance reforms or human rights adherence, China generally offers investment and infrastructure without heavy strings attached. This non-interventionist stance resonates with many governments in Africa, Latin America, and South Asia, where Chinese-funded projects are viewed as engines for economic growth, despite potential risks of debt dependency and political influence. At the same time, America's retreat from global trade and diplomacy has created a vacuum that China is eager to fill. The growing skepticism in Washington about globalization, coupled with political polarization and economic nationalism, has hampered the U.S.'s ability to act as a dependable global partner. Trade wars with allies, the weaponization of tariffs, and the abandonment of international agreements have eroded trust and credibility in the U.S.-led global order. This isn't just another headline, it's a pivotal moment. The Trump-China tariff war has unleashed a global financial tempest that could reshape the world economy for decades to come. Rare metals, soaring prices, market chaos, and a deepening divide between nations are just the beginning. And just when you thought it couldn't get any more surreal, Wanda Sykes joins the conversation. The comedian doesn't just skewer Trump for his contradictions. She shines a light on the fractures within our political system. From poking fun at his persona to questioning why Tiffany Trump requires Secret Service, Sykes uses humor to expose uncomfortable truths. Trump, she argues, isn't learning how to lead. He's merely a 70-year-old man causing chaos. And no amount of cosmetic surgery, new policies, or inflated grocery statistics can change that. So what's next for the global economy? Will cooler heads prevail, or are we careening toward an economic abyss? Don't look away. What we're witnessing could very well be the biggest economic plot twist of the century.